Good evening, everyone. Welcome back to the channel. So in this video, we're going to go over YieldMax ETFs by assets under management, a topic we haven't talked about in quite some time. So to start off with, we are going to cover, we've got 50 listed funds now. There's 13.5 billion in total assets under management. The average assets are 270 million. Average cost, if you average out all of the expense ratios, 1.19%. Average dividend yield, 55.41%, which is incredible, but it comes at a high cost. The average one-year return is negative 38.83%. So we are up to 50 ETFs now with a total of 13.5 billion in AUM, which stands for assets under management. So this makes YieldMax the 30th biggest ETF provider in the US. Okay, so let's go over by fund. So a lot of them have seen a negative change year over year. Misty is the biggest holding by far, 4.54 billion. The dividend yield for Misty, according to this, is 139.32% with a 0.99% expense ratio. The change year over year is a negative 40.94%. So you can look at the chart here and see of all of these, only one has like a positive like year over year change, which is kind of crazy. The second biggest holding is NVDY at 1.52 billion. Average dividend yield 92.23%. Expense ratio is a little bit higher for this one, 1.27%. Change year over year is a minus 48.59%. And we have our first commenter, as almost always, first one, Richard King, welcome. Okay, so continuing. Coney is the third biggest at 1.12 billion with 157% yield, but it's dropped 67%. So the dividend's coming at a high cost. Now, the dividend, and I call this the dividend paradox because the dividend is also overstated almost double. When the fund drops in half, the dividend percentage then doubles. So the dividend percentage is highly misleading. Just like in Tesla, this 134% dividend yield, just shy of $1 billion in assets under management, a 1.04% expense ratio, and a 47% change year over year to the negative. YieldMax is the fifth biggest holding at 809 million in assets under management with an average 64.46% dividend yield. This is one of the ones that I would say is more stable, but more stable in this case is 33.64%. Now, the ones that you see that are blank, like Palantir, the PLTY fund, these are too new to say. And honestly, this dividend yield, this is higher. If you annualize it, it's a lot higher. The expense ratio is also higher too, the 1.44%. So these expense ratios on these funds are really high, just shy of $500 million in assets under management. And then Ulti, one of the worst ones in my opinion, just shy of 400 million in assets under management, 147% dividend yield, 1.30% expense ratio, but a minus 59% change year over year. Same with YMAG, very similar to its other counterpart, YieldMax, its other weekly counterpart, shall we say. 331 million in assets under management, 52% dividend yield, negative 26% return year over year. AMZ, which was some of you all's favorites for a while, or among some of you all's favorites, 271 million assets under management, 50% dividend yield, negative 30% change year over year. SMCY is too new to have a year over year change. Now the Facebook / Meta one, this one is more stable, I would say. Again, you're seeing lower dividend yield, but also less NAV erosion. NFLY is the only positive one, 40% dividend yield, 7% to the positive price appreciation. And this website is called stockanalysis.com. So the rest of them you can see, the ones that are newer than a year, there's a bunch of them at the bottom. We've got a Berkshire fund that's still pending. We've got the RNTY, RDTY, Soxy, HOOY, sounds like Hooters, Biggie. Now, this strategy I thought was going to be better. The 6% yield with like more of a growth strategy. QDTY, 5E, Chippy, Dips, YQQQ, SDTY, Feet, Winter, GPTY, Airbnb, Crash, DISO. So these last, let's see, 4, 8, 12. So the last 16 funds are newer than a year, basically. And this is funny. I was just bashing Progressive. Then I get a pop-up ad for Progressive. How about that? Okay, on we go. So we've revealed the biggest in terms of expense ratio and in terms of assets under management. We've revealed the biggest one. We've also got Babo, Fiat, TSMY, Maro, SNOY, CVNY, and LFGY. These are all less than a year old, so these don't have a year-over-year change yet. But you can see a common theme for the others. AMDY, YBIT, both down. This one's 49%. This one's 58%. In the reasonably high millions in terms of assets under management. 82% dividend, 99% dividend here. Aptly, but again, you're seeing the same thing. NAV erosion, high yield, but NAV erosion. Same with MSFO, same with GUI. LFGY is too new. Same with AIYY. AIYY is also one of the worst ones in my opinion, which is shocking because AI should be doing really well. MRNY. Now, Jay mentioned before, and he'll be back on, by the way. He's coming back on the 16th, I believe. Let's check that. It's on a Monday. Yeah, the 16th. So it'll be next Monday. Not this coming Monday, but next Monday. So MRNY, he mentioned once there's like a cancer vaccine or something, that one is expected to shoot through the roof. GDXY, I'm guessing, has been around for a year now. So it's 18% down, high expense ratio, high dividend. Lower, though, because, you know, the commodity gold, it's a lower year-over-year price depreciation. But unfortunately, folks, I don't need to go over all of these, but this is a pretty bad record in terms of like NAV erosion. Here's an interesting AI overview here. YieldMax ETFs, while known for their high dividend yields, have faced criticism and concerns about their option writing strategies and potential for high losses. While specific assets under management figures for each fund are not readily available, some ETFs have seen significant fluctuations, including declines in value. Overall, investors should carefully consider the risks associated with these funds before investing. Key points to consider: high yields and risk, ETF performance, potential for losses, expense ratio. The expense ratio is really high, actually. I mean, for most of these, it's like really high. Anyway, so that's basically what I wanted to cover in this one. Let's go to the website really quick here. Tesla is still at the top, 1.23. Oh, this didn't even factor in OARK. That's like the first one they came out with, the OARK one. Distribution rate, if we sort, if it will let us, it's not going to let us. 132% for NVDY. 143% over here. Yeah, PLTY. I knew that one. If you annualize it, I knew it was going to be a lot higher. But anyway, folks, that's pretty much going to do it for us. I just wanted to cover that. So thank you all so much for tuning in. Please remember to like, comment, and subscribe, and join Discord. And we will see you all tomorrow or sooner. Take care. Bye.